And it's time for another Macro Monday, where I get you ready for the week ahead in 5 minutes or less. As always, this is a small snippet of our full Macro Monday newsletter. So if you're looking for more in-depth coverage, I encourage you to join over 3,500 other investors who start their Monday morning with our full Macro Monday newsletter. I will include a link to this week's edition in the description of this video. All right, let's get into it with our chart of the week. We're facing yet another week without government data, but this one stings a bit more than usual because we would normally be getting the October labor report. This data point is a must-have for anyone trying to gauge the state of the economy and a key input for monetary policy. However, we're not going to mope around. We're going to look for alternatives. So that said, we're not completely flying blind in what's going on with labor markets. The ADP employment report is still on deck. And contrary to some doubters, it offers a great deal of insight into the official payroll figures that we are not getting. And that's what our chart here shows. So as you can see, the R squared of this relationship is 0.83. And just a friendly reminder, an R squared of 0.83 is exceptionally high for a single variable relationship. So we'll be looking into the ADP report as a sort of proxy of the October labor market report that we are not going to get this week, unfortunately. And as you can see, government's still shut down, so we're just not going to have that much data. We have the PMIs, both from the ISM and the S&P or market, as well as the consumer sentiment data, but not a lot on the calendar. The big thing last week that we talked about was the FOMC meeting. That was the primary market moving event. For those just skimming the headlines, it was generally uneventful. The FOMC delivered a widely anticipated 25 basis point rate cut. This latest move brings total Fed easing to 150 basis points since the easing cycle began last year. Monetary policy shifts usually take about 18 months to appear in leading economic indicators, which suggests that we have a long runway to go, and the outlook should remain supportive for cyclical equities. To go a little bit more in depth, if we wanted to sift through the chairman's remarks, he appears to believe monetary policy is appropriately positioned to hold steady and test the economy's resiliency at the current Fed funds rate. Furthermore, without official government data, it makes sense to, quote unquote, slow down during the fog, as Chairman Powell suggested. Like everyone else on Wall Street, the FOMC is relying on information from private sources, such as Indeed.com, which provide job openings data that serves as proxies for governmental reports. Following Powell's comments, equity and bond markets sold off sharply, given that the December decision remains uncertain. This isn't a surprise, given investors had priced in nearly 90% odds of another cut before year end. So it was met with some skepticism. By Friday's close, however, most of those losses were recovered. As of right now, it looks like about 65% odds of a December cut. So much closer to 50-50 than the 90%, but still on the side of cutting. The longer the shutdown continues, the fewer reliable data points the Fed will have. And to us, that probably raises the likelihood of a pause. They're not going to want to keep cutting necessarily if they don't have an accurate picture of what's going on. Now, we did have some drama. We had some dissenters, which is kind of rare. So 2 Fed governors dissented at the October meeting, which I said is a rare occurrence. Meanwhile, new governor Stephen Moran, appointed by Trump, unsurprisingly, favored a 50 basis point cut, while Kansas City's Jeffrey Schmid voted to hold rates steady. Between 1936 and 2013, there were only 66 total policy dissents from just 13 governors. So we are a little bit in unprecedented territory having 2. Generally speaking, the 12 members like to vote in sync in order to project steadiness and certainty to the market. And that's not what we have. So we had the Dallas dead president, Lori Logan, echoed the sentiment, saying that she believes the labor market is in balance and expressed caution favoring a hold in October and a measured approach in December. That's what I'm going to leave you with here today. Thank you for watching. I hope you have a great week. Don't forget to subscribe, and I will see you right back here next week for another Macro Monday.